All right, so current time right now, 9:16. I'm going to mute the scanners. At this point, I'm giving up hope. It's painful. I feel defeated. Yesterday was a red day. Tuesday was a red day. So 2 red days in a row, and now today is a no trade day. But let's talk about this, and we could talk about the difference between hot markets and cold markets. And I think that statistics are an important component to this conversation because when the market is hot, what's going on? When the market's hot, we've got back to back big moves. We're seeing huge extensions, right? We're seeing these big squeezes. It's like every day we sit down, we've got 100, 200, 300% gainers. So that's when things get really exciting. And the fact is, in a cold market, we have the opposite. So if we look at the scans today, we have 3 stocks that are up over 100%, and then the rest are blah. They're nothing. So it's very divided. And these stocks that are up today, it's interesting because INTS is cheaper, made a bigger move, but it's a 41 million share float. CMBM is continuation from yesterday. It's not clean. And VCIG made the move after hours and then early pre-market and is selling off. So right now at this moment, there's really nothing that looks good. So in a hot market, probability is on our side that we're going to see bigger moves. Therefore, most likely, you're going to feel inclined to trade more, to be more aggressive, to take bigger positions. And that's absolutely the right thing to do. That's the right instinct. When you're seeing back-to-back big moves, when you're having big winners, that is the time to double down and take more risk, right? If we think of trading as a little bit of a strategy game to a certain extent, there's certain components that are obviously strategy based, and you could gamify it a little bit. When the market's hot, you're in a period where the odds are really high in your favor. So that's the time to take more risk and to be on the offense, to be aggressive. Now, let's look at today. Is today the day to be aggressive? Is today the day to be on the offense? And the answer is clearly no. So when the market cools off, you can have these long periods where it's just slow. You're not seeing big extensions. You're not seeing big moves. And so if you keep trading with big size, when the odds are against you, you're going to lose money. Now, I obviously lost yesterday and I lost the day before. Neither of those losses were nearly as big as that big loss I had back on October 7th, but nonetheless, 2 red days in a row. So that gives me the cue right there to take my foot off the gas. Now, what's interesting is that the instinct that a lot of people will have is that when it's cold like that, they get stubborn, they get frustrated, and they actually increase the frequency of trading because they feel like they're not making as much as they want to be or as they should be. Coulda, woulda, shoulda. So all of a sudden you're beating yourself up and you're saying, you know what, today it's 9:15, 9:20. I'm not going to leave for the day. I'm going to sit here all day long. So wait a second. You're telling me you're going to play the game longer on a day when your odds are worse. Well, that doesn't make sense when you put it like that. But emotion will tell you to stick it out because emotion's saying, I don't deserve to take the day off. I've got to sit here. I've got to wait it out. Maybe something will pop up, da-da-da-da. And so next thing you know, you end up spending your whole day sitting here, or what's worse is that you spend your whole day sitting here and then eventually you take a trade that's far outside the time of day you typically make money. And so you're most likely going to lose. So when I sit and look at my metrics, I look at these statistics, $6 million year to date. And if I look at win-loss expectation, you'll notice here my equity curve over the course of the year. So what do we see? Periods where slow and steady, periods where the market was clearly hotter, period where the market was cooler, hotter, and cooler, right? So when it's cooler, I reduce my share size and I trade less. And that's part of the reason my P&L doesn't have big drawdowns. It could be that I have these big drawdowns right here. And I have had some, but I am generally able to minimize them, as you can clearly see, because I recognize fairly quickly that it's time to take the foot off the gas. So yes, right now we're in a cold stretch. And some people have said, Ross, how long can these cold stretches last? Look, I've been trading for a very long time. So we just look back the last couple of years. 2022, when the Federal Reserve increased interest rates at a rate that was sort of unprecedented in modern, economic history, the market reeled. The markets dropped. And so we went into a full bear market in 2022 that lasted through 2023. And 2023 was the slowest year of trading that I had had personally in the last 10 years. So if I just clear out this date, so you could see 16, 17, 18, 19, these were all decent six-figure years. And then all of a sudden, we came into the pandemic and the market exploded. And I also developed a new strategy during this period of time, which was buying dips. I had really never done dip buying prior to that. I'd only been buying breakouts. So the combination of an incredibly hot market with dip trading, a new strategy, unleashed my best 2 years I'd ever had in my entire career. And as you can see, I made more in this 1 year than I'd made in the previous, 5 years combined. Then 2022, things cooled off, and 2023, things were really dead. And 2024, things picked back up. Well, what happened? The Federal Reserve started to taper back on the interest rates, right? And I had already told you guys, I was like, I know exactly what's going to happen. We had long conversations about it in 2023, early 2024. We knew this was going to coincide with the elections at the end of last year, And so we got this rally in the second half of the year. And then all of a sudden, we open up to 2025 being what has now been the best year here in the last 10, as you can see. And, prior to 2016, these were even smaller years. It was progressively building, trading a breakout strategy. And then right in here, I added the dip strategy, plus the market went crazy. So, that was a big deal for me, as you can see. But by 2023, it had come all the way back down. And so 2023 was a year where we actually lost a lot of traders. A lot of traders gave up. If you recall, we had the FTX collapse prior, and so crypto was really hurting. It was, the crypto markets were just in terrible condition. Small cap markets, the markets across the board were really hurting in 2022 and 2023. And so during that period, things just went really quiet. But I showed up every single day. And so if we look at 2023, and you see each of the months of the year, I was sitting down and I was trading every single day. I didn't take days off. I showed up, and it was hard because it was disappointing. I would show up every day and I would keep getting let down by the market. And so, but in spite of that, I showed up every day. I was grateful for what I had accomplished in 2020 and 2021. I recognize that the market has cycles and we were in a cooler cycle. But like all cycles, it'll come back around. And sure enough, it did. And so why have I done so much better here than I did here? In part, it's because over the last 5 years, I've become a little bit of a better trader. I've become a little bit more disciplined. And these are incremental improvements at this point in my career. But, I've become a little bit more dialed in, a little bit calmer, a little bit better at knowing when to take my foot off the gas, a little bit better at knowing when to size up. And, it's all of that has resulted in 2025 being a phenomenal year. So as we sit here today, at the end of October, yes, it's a little discouraging that yesterday was a red day. It was discouraging that Tuesday was a red day, but only to the extent that it's just a symptom of a colder market. And it's a little disappointing when the markets are cooler, right? So, I'm not particularly worried that anything has significantly changed in the market. I think that what we're experiencing right now is, kind of akin to what we had back in August. And then we had a great September, and then it was a little cooler in October. And we may have a great November. We may have a great December, the Santa rally. It may be cool. It's impossible to say. And this is the thing where I think as a trader, there's a certain degree of just embracing the fact that there's so much that's outside of our control. I will show up every single day, but whether the market's hot or cold, well, I just have to meet the market where it's at. if I get a lot of good opportunities, if we had good opportunities today, I could be up $100,000 just like that. We didn't get those opportunities, so I'm not, and there's nothing I can do about that. I could get upset about it. My reaction, I could be sad, I could be angry, I could be frustrated, but being angry isn't going to change it. So yesterday I was a little frustrated with myself because yesterday I felt like I was being a little too aggressive on lower quality stocks, a bit out of desperation. I didn't want to have a no trade day. So I was like, well, this is the best of what's moving. I'll break the ice and trade it. And then sure enough, I'm red. So I was like, well, that was dumb, but so I was a little upset with myself yesterday. Tuesday, I didn't really feel anything about that loss. I was just like, whatever. The market's slow right now, down $6,000, doesn't matter. But I think it's important to recognize that there are things within your control and there are things that are outside your control. And so what you can control is the strategy that you're willing to trade and how much risk you're willing to take and when you deploy that risk. Is this the time right now that I should be deploying big risk? The answer is no. This is not the time. And so I'm not. I've got money in my account. Right now, I think I have probably a little over $2 million in my Roth IRA. So I could take a 500,000 share position on some of these cheap stocks if I wanted to, but the market doesn't call for that right now. So I'm not going to do that, of course. I'm just going to sit on the sidelines. I'm going to be patient. Today's a no trade day, and tomorrow might be a no trade day. Now, the good news, of course, is that I do have this new small account challenge that I'll be starting soon, which I'm excited about. And although it's not the best time to start a small account, just based on a slower market, if you want to start a small account and you want to start trading, then you start and you trade with small size. It doesn't really matter if the market's hot or cold because you still approach it the same way. You trade the best quality setups, you trade more conservatively until you build a cushion. So that's what I'll be doing. And the small account challenge will be starting on Monday, this coming next week. So I'm just going to try to finish up the week tomorrow, if I can, with a couple of green trades. I'd love to, finish the month, a little bit more respectable than I am right now. But again, it's really outside my control. And the end of a month is also sort of arbitrary because the market doesn't care that it's the end of a month. It just doesn't really matter. So getting that out of your head is going to be better because it'll just be one less thing that you're trying to manage your trades around and manage your profit and loss around. Even the end of a year. I mean, in the grand scheme of things, we're talking about this being a marathon, showing up every single day for a decade, 10 years in a row, 15 years in a row, 20 years in a row, right? So some years are going to be better, some years are going to be slower, but if you really want to make this thing happen, you've got to be resilient, you've got to be willing to get back up when you get knocked down, you've got to be willing to show up and be in the trenches every day, even when it's cold, and I'm here every day. Hot markets, cold markets, I'll get paid more when the market's hot. I'll make less when the market's cold. But, I show up. And I'm really grateful because, at the very least, you look at this P&L and, big picture is you're looking at someone here who's been green every year for a decade in spite of bear markets. A lot of funds were red in 2022, 2023. But I showed up every day. I was trading, in my account, and I pulled a little profit out of the market. So yeah, some years are going to be bigger, some years are going to be slower, some days are going to be hotter, some days are going to be colder. I bring it up really only because there's been a lot of traders asking, Ross, how long can it be cold for? And it could be cold for a long time, but I don't see that something is happening in the market that would drive things to be cold for a long time. So at this point, I'm just accepting that we're in between hot cycles, hot themes, in sort of a very each theme and cycle is hot for a few weeks and then cools off for a few weeks, then it's hot for a few weeks, then cools off for a few weeks. So my expectation is that we will have another hot cycle before the end of the year, and it'll last for a few weeks. That's my expectation. That's my guess. I could be wrong, but that's what I would expect. So anyways, that's where I'm at here today. Just kind of wanted to share that with you guys. Obviously, it's 9:30. It's the opening bell. I could sit here all day long, but it wouldn't be good use of my time. It wouldn't make sense. So I'm just going to be grateful that I'm green on the month. I'm green on the year. And the big picture, life is good in spite of these slow days. All right, so that's it for me. Those of you guys who are going to watch this on YouTube, thank you as always for tuning in. And reminder, Trading is risky. My results aren't typical, so manage your risk. Please take it slow and practice a simulator before you put real money on the line. Okay, so with that, I'll see you guys tomorrow morning, 7 a.m.